trading mindset is not something you download, copy, or suddenly unlock. It is something you develop slowly, painfully, and deliberately over time. Most people enter trading believing success comes from finding the perfect strategy, the right indicator, or the best signal service. What they don't realize is that the real battle is not against the market, but against their own reactions to uncertainty, loss, and patience. Developing a trading mindset begins the moment you accept that trading is not about being right, but about managing risk, controlling emotions, and executing a plan consistently, even when the outcome is unknown. At the start, every trader is emotionally exposed. Wins feel euphoric, losses feel personal, and every trade feels like a judgment of intelligence or self-worth. This emotional attachment is what destroys consistency. A strong trading mindset begins when you stop tying your identity to individual trades. One trade means nothing. 10 trades mean nothing. Only a large sample size executed with discipline matters. When you truly understand this, losses stop feeling like failures and start feeling like part of the business. To develop the right mindset, you must first change how you see money in trading. Money is not a reward for being smart, and it is not a punishment for being wrong. Money is simply feedback. When you risk too much, money teaches you pain. When you overtrade, money teaches you fatigue. When you follow your rules, money teaches you patience. Traders who struggle emotionally are usually risking money they are afraid to lose. The moment you trade with money you cannot emotionally detach from, your decision-making becomes compromised. A healthy trading mindset requires accepting risk fully before entering any trade. Another critical shift happens when you stop trying to control outcomes. The market does not care about your analysis, your bills, or your emotions. You can do everything right and still lose. You can do everything wrong and still win. This randomness confuses beginners and feeds bad habits. A professional mindset accepts uncertainty and focuses only on process. You cannot control what the market does, but you can control when you enter, how much you risk, and when you exit. Once you stop trying to predict and start trying to execute, clarity replaces anxiety. Patience is one of the most misunderstood elements of trading mindset. Many traders believe patience means waiting for entries. In reality, patience means waiting through losses, waiting through drawdowns, waiting through boredom, and waiting through periods where nothing seems to work. This is where most traders quit. They mistake discomfort for failure. In truth, discomfort is often a sign of growth. The market tests patience before it rewards consistency. If you cannot sit through uncertainty without forcing action, trading will always feel stressful. Discipline is built when you do the boring things repeatedly without needing excitement. Journaling trades, reviewing mistakes, tracking emotions, and sticking to rules even when you feel confident or frustrated are not glamorous activities. But they are the foundation of long-term success. A strong trading mindset is not loud or aggressive. It is calm, controlled, and repetitive. The best traders are not adrenaline seekers. They are routine builders. One of the biggest breakthroughs in mindset development happens when you stop chasing motivation and start building structure. Motivation is unreliable. Some days you feel confident, other days you feel doubtful. Structure does not care how you feel. A written trading plan, fixed risk rules, and predefined setups remove emotional decision-making from the process. When rules decide for you, emotions lose power. The goal is not to eliminate emotion, but to prevent emotion from influencing execution. Ego is another silent enemy. Ego wants to be right. Ego wants to win back losses quickly. Ego wants to prove intelligence. The market punishes ego relentlessly. Developing a trading mindset requires humility. You must accept that the market is always right and that you are simply a participant reacting to probabilities. The moment you argue with the market, you lose objectivity. The moment you accept being wrong quickly, you protect capital and mental clarity. Consistency comes when you understand that trading is a long-term skill, not a short-term opportunity. Most traders overestimate what they can achieve in a month and underestimate what they can achieve in a year of disciplined execution. A strong mindset plays the long game. It focuses on survival first, improvement second, and profits last. If you stay in the game long enough, while continuously refining behavior, results eventually follow. Emotional control does not mean suppressing feelings. It means recognizing them without acting on them. Fear will show up. Greed will show up. Doubt will show up. The difference between a struggling trader and a consistent one is not the absence of emotion, but the response to it. When fear appears, a disciplined trader reduces risk instead of avoiding trades completely. When confidence rises, a disciplined trader does not increase risk impulsively. Balance is everything. Developing a trading mindset also requires separating effort from outcome. You can put in perfect effort and still experience losing periods. This does not mean you are failing. It means variance is doing its job. When you judge yourself only by results, emotions swing wildly. When you judge yourself by execution quality, stability increases. Ask yourself after every session, not whether you made money, but whether you followed your plan. Over time, something shifts. You stop needing constant reassurance. You stop checking charts obsessively. You stop reacting to every candle. Trading becomes quieter. Decisions become cleaner. Losses become smaller. Wins become less emotional. This calm state is not luck. It is the result of mindset development through repetition, self-awareness, and discipline. The trading mindset is built when you accept responsibility for everything. Not the broker, not the market, not news events. Just you. Responsibility gives power. Blame removes it. The moment you fully accept that your results reflect your behavior, you gain the ability to change them. In the end, developing a trading mindset is about becoming a different person than the one who started. More patient, more controlled, more honest. Trading exposes weaknesses faster than almost any profession. If you are willing to face those weaknesses instead of running from them, trading becomes not just a way to make money, but a tool for personal growth. If you are struggling right now, it does not mean you are failing, it means you are early in the process. Mindset is not built during winning streaks, it is built during confusion, frustration, and slow progress. Stay focused on execution. Respect risk. Trust the process. The results will come later. As time goes on, you begin to realize that the market is not your enemy, but a mirror. It reflects back your habits, your discipline, your impatience, and your emotional state. When you rush trades, the market shows you chaos. When you hesitate, it shows you missed opportunities. When you follow your rules, it shows you stability. Developing a trading mindset means learning to read that mirror honestly, without excuses and without denial. A strong mindset is built when you stop looking for certainty and start operating in probabilities. Many traders struggle because they want guarantees. They want to know if a trade will win before they enter. But the market does not offer certainty, only opportunity. Once you accept that uncertainty is permanent, fear loses its grip. You stop asking, will this trade work? And start asking, is this trade worth the risk? That single shift changes everything. Another part of mindset development is learning how to sit with discomfort. There will be days when you follow your plan perfectly and still lose. There will be weeks when nothing works. The trader who survives understands that discomfort is not a signal to change strategy impulsively, but a signal to stay disciplined. Growth in trading often feels like stagnation before it feels like progress. Well, if you can stay calm during these periods, you are developing the mindset most people never achieve. You also begin to understand that trading is not about constant action. Sometimes the best trade is no trade. Doing nothing is emotionally difficult because it feels unproductive. But patience is productive. Waiting protects capital. Waiting preserves mental energy. A developed trading mindset respects waiting as a position, not a weakness. As your mindset strengthens, your relationship with losses changes completely. Losses stop triggering panic or revenge. You no longer feel the need to win it back immediately. You understand that protecting capital is more important than chasing profits. This is where many traders finally break free from emotional cycles. They stop trading to feel good and start trading to execute well. Eventually, confidence becomes quiet. You don't need to talk about trading all the time. You don't need validation from others. You don't need to prove anything. You trust your process, you manage your risk, and you let results unfold naturally over time. This is what a developed trading mindset looks like in practice. Trading will still challenge you. There will still be hard days. But you will no longer feel lost inside them. You will know what to do, how to respond, and when to step back. That clarity is not accidental. It is built through repetition, honesty, patience, and discipline. If you are working on your mindset right now, you are doing the real work. Strategies come and go. Markets change, but a strong mindset adapts to any condition. Focus on becoming consistent before becoming profitable. Focus on execution before outcomes. Focus on who you are becoming, not just what you are earning. Because when the mindset is right, the results eventually follow. And if you like this video, kindly like, subscribe, and drop a comment.